The GST disclosures are made in tax audit report. So one by one, whichever clause of tax audit report are relevant, which will have your impact on GST also, that we will be discussing about it. Now, we have noticed whenever the department do audit or investigation, we have noticed they will ask not only just an audited financial statement, but also a tax audit report. Now, when we will go one by one with the various clauses which is having impact on GST also, you will understand that there are various things you need to take care before filing tax audit report. Because there are multiple clauses where GST related disclosures are made. And as we all know, any wrong reporting or any error done while doing tax audit report reporting in respect of GST can lead into a huge tax demand. Or there may be a consequences which may result into a general penalty also. So with me today is we have Anil sir also, who is a partner of Venu and Vinay, who look after the statutory audit report and your income tax compliances. So he will be also there with us to guide us through tax audit report. So sir is also there. Then with me is Jagadeesh. CA Jagadeesh is there, who is heading our Vizag branch, and CA Hitesh, who is also looking after the GST in VNB. So with this remark, I am handing over to Jagadeesh. Jagadeesh, you can start the session.
Yeah, okay. Yes. Hope my screen is visible to you all. Yeah. Okay. Now, yes. The agenda of today's session is first we will discuss about the GST disclosures in the tax audit report and what are all the GST compliances in the tax audit report, and then we'll discuss on GST annual return preparation, how we before preparing the GST annual return, what are all the precautions, what are all the reconciliation that we need to be prepared, and in the end we'll discuss on the recent changes. So you all know that in the tax audit report, Form 3CD divided into two parts, Part A and a Part B. Part A is having 4 clauses and Part B is having 40 clauses. Total 44 clauses are there. So today we'll discuss only those clauses having GST implication. So as Ashika ma'am said, there are many clauses in the tax audit report which are having GST implications. Now we'll see clause by clause which are having the GST implications. Starting with the clause 1, name of the SSC. In the part A, we need to provide a basic summarized information of the SSC. Okay, so in the clause 1, we need to provide a name of the SSC. That is the legal name. So what the relevance here with the GST? So here you need to cross check whether the legal name what we are furnishing here is matching with my GST REG06. That is the GST registration. It should match. If it is not matching, ensure file an amendment and change the legal name. Now coming to the address, the clause 2, we need to give an address. So here we need to give the head office address as well as the branches. So here I have seen that most of the cases, no one is adding the branches as an additional place of businesses. Okay. So ensure that each and every branch, what we are reporting here in the clause 2 is there in your GST registration as an additional place of business. If your branch is located outside a state where the principal place of business is located, if I am located in Karnataka and my branch office is located in Andhra, Tamil Nadu, ensure that we have taken a registration in the state also. So, otherwise, department may send you a shocker notice why I have not taken registration here in the state. So, in the most of the cases, like in Oaks contract service, you are located in Karnataka and you have awarded a contract somewhere in the Tamil Nadu or Maharashtra. So, you are raising an invoice from Karnataka to so-called Maharashtra. So in that case, you may say that I am doing business from my Karnataka. So why there is a need of registration in the Maharashtra? So here you are having a permanent establishment in Maharashtra. From there you are operating at the branch office, and the branch office you are declaring it in your tax audit report as well. So that's the reason you take the registration if you have a branch office in the other state also. And now coming to the clause 4. Clause 4, in this clause 4, we need to provide all the registration details, GST registration detail. What are so here, should I declare all the GST registration numbers? Yes. Even if you have an ISD registration number also, that also you need to declare it in the clause 4. So let's say one of my registration was cancelled in the mid of the year. That is around in the September, but my registration got cancelled. Even on 31st March 2024, that registration number is not active. Even that case also, that cancelled registration number is need to declare it here in clause 4. Yes, the answer is yes. We need to declare even that registration number also in the clause 4. So, okay. And recently, from the 16th August onwards, GST department is conducting a drive against the fake registrations. Yes, just a second. Yes. So from 16th August onwards, CBIC has started a second phase of drive against the fake registration. The objective of this drive is to identify all the fake GST registrations. In the first phase only, they have identified some thousands of fake registration. So if they determine any registration as a fake registration, they immediately cancel the GST registration. Not only canceling the GST registration, also the recipient to whom the input tax credit was passed, that credit also will also be blocked. And also the recovery proceedings will be initiated both from the supplier and the recipient who has procured the supplies from this fake registration. So be careful. So in order to avoid this cancellation of registration, make sure you have followed all these uh, conditions. First thing, signboard. So in many cases, many small traders, small businessmen, no one is keeping this signboard. So at least for the 3 months, that is from the at least till the completion of this drive, clearly display the name, address, and GST on your signboard and GST registration certificate. So this registration certificate must be placed in the prominent place of the premises and place of business. Whether the place of business what you have given to GST at the time of registration, whether you are in the same address or not. If you are the address, business address, and the address in the RC is not same, again you will land in a trouble. Okay, ensure that both the address should be same. If it is not same, apply for the amendment. A proof of place of business. Have a valid proof of ownership. In case of rental premises, you should possess a valid rental agreement at the time of their visit and the record maintenance. Under GST, under Section 35, you need to certain records and documents have prescribed to be maintained. So ensure that all those documents and records are maintained in the premises. So what are all the documents that need to be required? We'll see it in the later slides. So be careful at the time of visit. GST officers may visit your place at any time. So now coming to the clause 9A. What is this clause 9A? In the clause 9A, we require to, if the assessee is a firm or association of person, then we need to declare all the details of the partners or directors or the members in the clause 9A. So what the relevance here with the GST? So whatever the details you are furnishing, that is the name of the partners or directors here in the clause 9A. Cross-check whether the same names are there in the GST registration. If not, why there is a difference between my tax audit report 10 and GST registration. If my GST registration particulars are not updated by amending in the GST registration. So now coming to the clause 10. In this clause 10, we need to provide the nature of the business. So what is the type of the business? If you are doing more than one nature of business, what you need to declare all the nature of businesses here. So here in the GST and portal, we need to declare the top 5 goods and top 5 services in which we are dealing. Ensure that what we have declared HSN or SAC in the GST registration must be relevant to the nature of business what you have furnished in the tax audit report. If not, be careful. You have declared all the things in the clause 10. If there is any change, the nature of the business or that goods or services you are dealing with, you update the details in the registration also, in the GST registration also. Now coming to the clause 11.
One minute.
Yes.
Clause 10. Okay. Now, if you will notice, whatever Jagadeesh has discussed, you will be feeling like it's more of the compliance purpose. But you have to understand that compliance plays a very important role. So let me share you a few examples. When he talks about the business, he said you should make sure your RC copy and what you have declared in tax audit report match. Why it is important? Now, if suppose while taking registration, you might have thought that we may do this type of business, but ultimately may not have happened. Like for example, you thought of doing it that we will do some in relation to construction, but you went ahead with renting of property. All this plays an important role, not just from the registration certificate updation, but your input tax credit. As you know, place of supply plays a very important role. So suppose your service category by mistake in RC is construction service, but actual business which you are taking out is renting of immovable property. And as you are well aware, section 17(5) block credit, which disallow you the ITC. So in your registration certificate, it may be showing construction service, which will put your file on the GST portal in red mark as a warning sign. Reason being, you are not eligible for ITC and you are claiming the ITC. One of the example. Second, where recently one of the case which has happened is where we were required to file a refund claim. So while filing refund claim, it has been noticed that client missed out to add one service against which he is claiming to be export and claiming the refund. Though it appeared to be a small issue, but officers were like, as it is not added in your registration certificate, it will be difficult for me to allow the refund. First go amend your RC, then we will see whether it can be allowed or not. Though this are all appears to be procedural, but this procedural lapses can result into a higher implication. That's why if you will see, we are discussing with small point, name of the SSC, partner of the, that are not a small point. This procedural lapse can result into a higher issue. Like when he said about the partners and director updation. As you are, you will be aware that there is a concept of called co-noticing and even to make recovery from partners or directors of the company. So if partners are not updated, maybe or directors not updated, who were at that time may not be presently, may be held liability for the present issues, present cases. Recovery can be made against if those updates are not made. See, obviously there will be fine, you will be explaining I was not there and all. But what if you have the opportunity, it's better to take that precaution now instead of waiting for things to happen. Jagadeesh, over to you.
Yes. Yes. Now moving on to the next clause, that is clause 11. So in this clause 11, we need to furnish the information about what are the types of books of accounts we are maintaining and where we are maintaining. And so under GST, as discussed in the previous slide, the section 35 has provided a list of goods, a list of documents or records that needs to be maintained by every registered person. So check whether the books of accounts which section 35 prescribed are all covered in the clause 11A. If not, maintain the books for the GST also. This is yes. Now moving on to the next one, clause 13, method of accounting employed in the previous year. So in this clause, we need to furnish the what type of method of accounting we are following. As per section 145 of Income Tax Act, we need to, in case of PGBP or income from other sources, mandatorily, we need to follow either mercantile basis or cash basis of accounting. Whereas coming to the Companies Act, Section 128 of Companies Act mandates to maintain books of accounts in accrual basis. Whereas coming to the GST, GST is driven by the time of supply. That is Section 12 and the Section 13. So because of this different method of accounting as per GST and the books of account, definitely we will get a difference in the turnover. So identify those differences and prepare a detailed reconciliation why there is a difference between my books and the GST returns. So before filing the tax audit report, before finalizing the GST annual return, be prepared with a detailed reconciliation why there is a difference between my books of my records as per my income tax and the GST. So the coming to the next clause, clause 16. In the clause 16, we need to report what are all the amounts not credited to the P&L account. If you see the clause 16, clause B, here we need to declare the pro forma credits that are like ROTAP and drawback, refund of duty of customs or excess or service tax, a refund of sales tax, or value added tax, where such credits, drawbacks, or refunds are admitted as due by the authorities concerned. So here for reporting all these in this clock, it is a bit difficult task. For this, we need to verify the third-party portal. Like for the duty drawback and IGST refund, you can go and check in the ISGate portal. Similarly, for the refunds under GST, you can check it in the GST portal. Likewise, you will need to fill it in the clause 16. So, so what are all the income not credited to P&L account that we need to declare it here? But whereas under GST, we will declare all these in the under non-GST. Yes. Ashika, would you like to add anything here in the clause 16? Yeah. Okay, then I will move on to the next clause, clause 17. In the clause 17, where
Jagadeesh, 1 second.
yes, sir.
Basically, with respect to clause 16, when we see the duty drawback and all those things,
Yes, sir.
predominantly when we say the financial statements of books of accounts and all those things, the financial statements will consist of only the P&L net amount. It will not consist of any GST impact, GST levy, or the duty drawback which you are claiming from the government. That's one thing. And whereas the tax, as per the tax rules, for the purpose of income tax and all those things, they say inclusive method. The presentation should be an inclusive method, which should be of net sale plus GST amount. That's what the department looks at. So whereas the financial statements will talk about the pure net sale amount.
Yes.
Okay. So the that is the one thing what we have to look at it. What is the sale value as per P&L? What is the GST levy, which is not shown in the P&L? Club together, we have to see the what is the turnover which is happening. And next is with respect to the point what you mentioned about the duty drawback or basically the duty drawback. that will not be considered in the P&L unless until the money has been reflected in the bank account or it is realized. So those things will be cash basis method of accounting which will happen. Okay.
Okay.
Yeah.
So on the face of the P&L account, all these incomes will not be reflected, even though under clause 16, we need to report it here.
Yeah,
Right,
even
sir?
yeah, in the sense like unless until the money has been realized in our bank, we'll
Okay.
not consider it as an income accrued. So
Yes.
these things are predominantly cash basis method of accounting which will happen.
Okay. Okay. Under the clause 17, when there is any sale of land and building for a consideration less than the value adopted by any local authority or any state government. So if you sell any property less than the stamp duty value as fixed by the state government, those details you need to report it in the clause 17. Let's say my government value of my land is let's say 50 lakh, but I have sold it only for the 35 lakh. So those list of those details of property I need to declare it in the table 17. So you may say that what is the relevance for it in the GST? So under GST, for the purpose of section rule 42 or 43, that is the reversal in proportion to the exempted surplus, right? So uh, sale of land and building is covered under the schedule 3, but for the purpose of rule 42 and 43, the sale value, stamp duty value of land and building should be included in the turnover of exempted supply. So many of the cases, uh, many taxpayers are missing to include this value, stamp duty value of land and building in the exempted turnover. So for the reversal under rule 42 or 43, you need to include this value also as an exempt supply. So that's the relevance of clause 17 in the GST. So coming to the next clause 18. Here in this clause, we need to declare the depreciation of the block of assets and what is the rate of the depreciation for each block of the type of the asset and the written down value. All these we need to give it in the clause 18. Clause 18 is meant for the depreciation. So if you see the from the GST perspective, if you see the section 16 subsection 3, if you claim the depreciation on the ITC component, then you cannot claim the ITC. So you ensure that whatever the information you are furnishing in the clause 18, you have not claimed any depreciation on the ITC component. Once if you claim the depreciation on the ITC component, you are not allowed to take the ITC. So be careful reporting here in the clause 18. So whatever the yes. So, yes. Coming to the clause 21A. In this clause 21, we need to provide the yes.
From 18, when we are discussing, we are not discussing only from the point of view of reporting in the tax audit report, but how the officers also see the tax audit report. They will not only serve as a purpose for 16.3, but it also serve as a purpose to check your addition in the assets. So in addition in the asset, when I say, they can come to know which type of asset it has been added. So if it is a motor vehicle, some addition has been made. So they will check whether you have availed the ITC or you have blocked the ITC. Second, from this schedule, I will also come to know about the sale made. So as an officer, they will also check whether on that sale which has been made, either of any type of asset, motor vehicle, laptop, have you properly discharged the GST as applicable. So when we are discussing, we are not only discussing from reporting point of view, but how the officer will verify and check those details which you have furnished over here. And you should also make sure, because when we are doing tax audit report, before starting that, we do the reconciliation of books. That is what the Jagadeesh firstly said, that we do the reconciliation to make sure if any error has been committed or any tax has been short discharged, it is taken care beforehand only. So while reporting this part also, you can cross verify once again whether the steps which need to be taken under GST has been taken or not. Over to you.
Yes. Coming to the next clause, clause 21A. In this clause, we need to provide the expenditure based upon the nature. Based upon the nature of the expenditure, we need to bifurcate as a capital expenditure, personal expenditure, advertisement expenditure, like so on. So if you see the relevance of GST here, if you furnish any of the expenditure in the personal expenditure, let's say, so if you have under GST, you cannot claim ITC on the personal expenditure. So whatever the expenditure you have furnished in the personal expenditure, ensure that you have not claimed any ITC. So a department in future, department may ask whether you have claimed department may use this tax audit report to do the GST audit. And similarly, advertisement expenditure. Check whether this advertisement expenditure is a sponsorship. If it is a sponsorship, then it will be covered under the reverse charge mechanism, that is 13/2017. Check whether you have, if it is covered under the notification 13/2017, that is a reverse charge notification. Check whether you have paid the GST liability under reverse charge or not. If not, pay it. And similarly, expenditure incurred at clubs being entrance fee and subscription. As we all know that Section 17(5)(c) restricted ITC on this club membership or health or fitness membership fee and all that thing. So ensure whatever the information, whatever the expenditure you are furnishing it here in the clause 21A, be cautious. And before reporting it here in the 21A, check for broker trade, whether it is eligible or not. And also we need to declare expenditure incurred at clubs being cost for the club. This is also the ineligible thing. And expenditure by way of penalty or fine for violation of any law for time being in force, that you may pay the penalty under GST. So those details we need to furnish it here. What is the source to report it here in the clause 21A? You may check your DRC 03, why I have paid the DRC 03 payment. And also you can check the, yes.
Jagdish, 1 second. So over here with respect to expenditure on penalty. Okay, see the penalty when we are paying as a late fee under GST or TDS, those things will not be considered for under tax audit, and that will be disallowed under Income Tax Act also. And predominantly when we say late fee, when we say penalty, you should explain more about the section under GST balance, which will be disallowed, which will be added back to the profits under Income Tax Act. Okay, for when we say for tax or under Income Tax Act or anything, it's a penalty clauses which will apply. The interest which you're paying under 234 ABC or the 270, that is allowed expenditure. Like if I'm filing my return, TDS return lately, there's a late fee of 100 rupees which is charged. That is disallowed. That will be added back to profit. In the similar way, if under GST parlance, you have to explain more on which sections will fall under here.
Okay.
Yes. Yeah, what you?
Yes. Yes, sir. So while filling this clause, be careful. In case of personal expenditure, ensure you have not taken any ITC on that. Similarly, check for the reverse charge applicability and all the things. And yeah, furnishing of details of amounts debited to penal. This one already Anil sir has covered it. And now coming to the next one, clause 21B. This is all about the foreign payments. In this clause, we need to report if any payment made to the non-resident. So if you see the relevance from the GST perspective, so check whether the foreign payment what we have made is covered under import of service or not. If it is covered under import of service definition, check whether you have discharged RCM liability for that import of service. If not, pay it. So while reporting it here, ensure whether it is covered under import of service definition or not. If yes, you paid the RCM liability. Yes, sir.
Jagdish, 1 second.
Yes.
So when we say import of services, predominantly we have to look at the transactions which we are doing through the online portals, like whether we have Facebook, Google, Amazon. Even these entities have an Indian operations, but you have to look at the bills from where you're getting, like whether it's from Amazon India or from Amazon US. So if the transactions are in a US parallel, US number, and there is no GST levied by the supplier, then these things will be fall under your import of services. So then your RCM liability will come and play a role there. Otherwise, for all the other transactions, these things will be like a domestic transactions which is taking place, and a regular TDS norms will be okay. And place of supply, you have to look at it. Like place of supply is anything here to be seen. Like now, when we say some transactions which we are having in some of the clients, the place of supply is in US itself. Then will it fall as a RCM?
Place of supply
No.
is an important role. Even if detail is furnished over here, the first thing we have to check, because it's a payment to non-resident.
Right.
As it is said, payment to non-resident, I have to go into those details, what expenditure has been incurred for which payment has been made. Once I came to know there is a foreign party, forex involved, the third thing which I need to check is place of supply. If place of supply falls in India, then only RCM applicable, otherwise, no.
What do you, Jagadeesh?
Yes, sir. So hope it is clear. Only if it is satisfying the definition of the import of service, then only we need to pay a discharge liability under RCM. Yes. Now coming to the next clause, it is clause 23. In this clause, we need to furnish all the particulars of payment made to the related parties. So what related party? So ensure that whatever the information we are furnishing in this clause, ensure rule 28 of CGST rules is complied or not with respect to the valuation. So you cross check the whatever the furniture, whatever the information you are furnishing in the clause 3 with the rule 28, whether it is satisfying or not in terms of the valuation, whether you have discharge liability correctly or not, you please check. Coming to the next clause, yes, clause number 26. Ashika ma'am, can you please explain this? Clause 26.
Yeah, clause 26 of the tax audit report basically talks about it talks about reporting of the statutory liabilities which are payable at the year end. This clause has been broadly classified under two subclauses, subclause A and subclause B. It is treated as one of the most important clauses to be reported in the tax audit report. When we talk about when we draft the computation of income as well, the reporting in this clause becomes of utmost relevance, because if something has been reported in this clause and has not been, the effect of which has not been taken in the computation, we might will definitely receive an intimation from the department under 143(1)(a) for an proposed adjustment. So the broad two clauses are clause A. In this clause, we basically report the liabilities which were actually pre-existing on the first day of the previous year, which means the liability was already existing in the last balance sheet as well, but it was not paid. So for reporting it in a proper way in this subclause, we need to go back to the previous year tax audit report and check whether the same has been reported there or not. If the case is there that the figures have been reported in previous year tax audit reports and the liabilities which had been reported have been paid during the year, we put it in subclause A, and corresponding deduction we claim in 43B in the computation of income as well. But suppose the liability pre-existed on the first day of the previous year, but it has not been paid till date, then we report it in subclause B of clause A under this clause. Okay, this is only a reporting purpose. No effect of this reporting goes in the computation of income. Now coming to subclause B of clause 26, it has again been divided into two parts. With the first part states that the liability which has been incurred during the previous year and has been paid before the date of filing of ROI under 139(1). So if any liabilities, keeping it limited to GST, if we say we need to check the filing table of the SSE for the months, the GST 3B of the months which have been filed after March 31, 2024. It is not necessary that only the March return has been filed after the previous year. There might be cases where the SSE is filing late returns on GST, and so the liability should be cumulative, which needs to be reported in this clause. Now, there might be cases where the liability was incurred during the previous year, but till date it has not been paid. So we report it in subclause B of main clause B under clause 26 of tax audit report. Correspondingly, we disallow the amount which we have reported in this subclause in the computation of income. Now moving to the examples which will come under this clause reporting in Form 3CD pertaining to GST. Every liability which is payable on forward charge or reverse charge, which has been booked in the books of accounts and has been paid or not, we have to check it and report it in the appropriate columns. GST late fees. Now, why I am saying GST late fees? Because we all know there are two types of accounting method which we follow, either mercantile or cash basis. Now, if we follow mercantile accounting, then GST late fees provisions are made in the books of accounts. So when we report under clause 43, under clause 26 of tax audit report, which pertains to 43B, it includes all types of tax, duty, cess, fee, and that fee will also include GST late fees. So GST late fees, which has been payable after the, which has been paid after the March month, after 31st March, needs to be reported here. The third point now comes GST provision created in the books of accounts on account of error identified in the course of audit. Suppose at the time of performing the statutory audit, we, while performing reconciliations, derived at a conclusion that GST has been underpaid or GST liability has not been paid. So we create provision for that in the books of accounts at the time of conducting tax audit only or at the time of conducting the statutory audit, depending upon the nature of the SSE. Now, if we have created such provision in the books of accounts, we need to report that as well in these clauses of Form 3CD because these are also statutory liabilities which is payable at the taxpayer's end. And for these, to cross-check these payments, we really need to be sure that these payments have already been offset with DRC 03 because there might be cases the client may say you that we have already paid the taxes, but that is lying idle in his electronic cash ledger. Till the time DRC 03 is filed, it doesn't get paid off fully. The offset is must in these kind of cases for appropriate reporting under clause 26 of Form 3CD.
Adding to point what Arsha was mentioning, we have to reconcile the numbers, what is disclosed in financials, summation of 26A and 26B. Both should reconcile to the numbers which is reflected in the financials, the statutory liability, being it GST, PF, ESI, or any other statutory which is due, the leave encashment, bonus payable. All those numbers should reconcile to the numbers summation of clause A and clause B of 26. Yeah, what is?
If clause 26 you will see, you will come to know that from this officer will come to know you are a compliant SSE or a late filer or you have any undischarged liability. Sometimes it has been seen that tax audit report, normally when we do audit and all, we have a habit of last year copy paste. So sometimes figure doesn't get changed and based on which notices are issued. So you need to be careful. Make sure this point is properly taken care. Let me show it to you.
Yes. Now moving on to the next clause, clause 27A. In this clause 27A, we need to provide the, yes, just a second, yes. Yeah, we need to provide the details of the input tax credit, opening balance, that is the brought forward balance from the previous year, and the amount of ITC FY and the amount of ITC utilized and the closing balance, that is the carry forward balance. Though there is no reference of input tax credit notified in the Form 3CD. However, in the e-filing utility, there is a wording called the wording used input tax credit. So all the SSCs registered on the GST need to furnish the information here in the clause 27A. So by providing the details here in the clause 27A, SSC should ensure that details furnished here in clause 27A reconcile with the books of accounts, and vice versa, details available on the GST portal. So yeah, as we discussed in the previous slide, that SSA may adopt either the books of accounts or the GST portal to provide the information, but consistency should be followed. This year I have adopted the books of accounts, and next year I have adopted the GST portal. You should not do like that. And yes, why the difference between the GST portal and the books of accounts? Because in GST, we eval ITC based upon the GST 2B, whereas in the books, we account the invoices based upon the accrual system. As and when we receive the invoice and the goods, will account in the books. But whereas in the GST return, we eval ITC when and only it is reflected in the GST 2B. That's why there will be a difference between my books and my GST portal. So you prepare a detailed reconciliation of your balances as per your books and the GST returns. So coming to the next clause, clause 35, is just a disclosure requirement. In this clause, you need to declare the quantitative details of principal items of goods traded. That is opening stock, purchases, sales, closing stock, and the shortages or excess, if any. As well as not only the Income Tax Act mandates this maintenance of information, but also the Section 35 of the GST Act, of the CGST Act, mandates to maintain the stock registers in the same format. So you can furnish information here by using the stock register, what you have maintained under GST. Now coming to the next clause, clause 5B, this is also in case of manufacturing concern, you need to give the quantitative details of the principal items of raw materials, finished products, as well as the byproducts. So this is how you need to provide the information here. It is given on the A and B. A about the raw materials and B is for the finished goods. Coming to the next clause, clause 38. If any audit conducted under Central Excise Act or the GST, if any audit was conducted under any other act, if any disqualification is there or any disagreement or any matter as reported or identified by the auditor, those details you need to furnish it here in the 38. Similarly, clause 39 is about if any audit was conducted under Section 72 of the Finance Act 1994, that is the service tax regime. So now, from now onwards, from the 2017 onwards, if any audit was conducted under the GST, then you need to furnish the information here. Whatever the demand they have proposed, disqualifications, all the detail you need to furnish it here in the clause 39. And coming to the next one. Yes, clause 41 of the tax audit report. In this clause, you need to furnish the whatever the demand raised, whatever the refund details, like refund claimed, how much of refund issued, all those details you need to furnish it here. So what is the source of for filling this clause 41? You may with the GST portal, just a second. Yes. So you may GST portal to fill this clause 41 of the tax audit report. In the electronic liability register, you may search it for the refund or DRC 07 to identify the demands. Similarly, in the tax refund module of the GST portal, you can see how much refund you have claimed, how much refund they have sanctioned, issued. All the details you can take it from the GST portal right away. So similar clause, similar reporting requirement is also there in the GST annual return, that is GST 9, that is table 15 of the GST 9. In this also, if you see the table 15, so how much refund you have claimed and how much refund it was sanctioned. The same reporting requirement is also there in the table 15 of the GST 9. So whatever the data you have prepared for your tax report, the same you can use it to fill your annual return. So similar way, for the demands also, how much the total demand is raised and how much you have accepted and paid, how much demand you have accepted and paid, and total demand spending out of E above. So the same reporting requirement is also there in the GST annual return table, that is table 15 of the GSTR 9. Now coming to the most important clause, clause 44. This is the last clause of the Form 3CD of tax audit report. We'll see what is clause 44. In this clause 44, we need to provide the breakup of total expenditure. So first of all, what we need to do is we need to bifurcate the total expenditure into the two categories. One is expenditure relating to the entities not registered under the GST. So whatever the procurements you procure from the unregistered entities and the expenditure in respect of the entities registered under GST. So this is the registered one, this is the unregistered one. And again, the this category, that is procurement from the registered under GST, you need to further bifurcate into the three parts. That is relating to goods or services exempt from the GST. If we have procured any goods or services from the register which are exempted, but you have procured from the registered person. And next one is relating to entities falling under the composition scheme. He is registered, but registered under the composition scheme. You have procured from that person, the composition dealer, and relating to the other registered entities. Nothing but you have bifurcated here. From the first category, if you remove 3 plus 4, the balancing figure obviously would be the 5. So like this, you need to furnish information here. So what are all the inclusions, what are all the exclusions, we'll see in the later slides. So hope you all got a basic idea about how to report it here in the clause 44. Just simple thing, you need to bifurcate into the two categories. One is from procurement from the registered person, other is from unregistered person. Again, the registered person subdivided into three more, that is exempted, composition, others. That's it. So applicability. Actually, this clause was introduced long back in the 2018, but kept in abeyance till 31st March 2022. But from now, from 30, whatever the tax audit report issued post 31st March 2022, all the SSS needs to be prepared this clause for need to furnish information in the clause 44. So reporting is for and not GST. Whatever all the GSTs are there under the same pen, the whole information you required to furnish it here. So applicable even if audit is not registered under the GST. This may happen if I am engaged only in the supply of exempted supplies and my turnover is 100 crore, but I am engaged only in the supply of exempted goods. In that case, I am not required to take the GST registration, but I am subject to the GST, tax audit. In that case may be there. Even for them also it will be applicable. Similarly, applicable even audit is registered and his entire part income that we discussed just now, and other points. Reconciliation of values reported in the clause 4 with the P&L account. That I will tell you with the example in the next coming slide. See, this is the example. And on the face of my P&L account, the total value of expenditure debited to my P&L account is 100 rupees. So there, if you see the clause 44, there they have used the term called the total amount of expenditure. Expenditure means both the revenue expenditure as well as the capital expenditure. So that's why I'm adding the capital expenditure, which will not be on the face of the P&L account. So that's why I'm adding it here 100 plus 20. So my total expenditure is 120. So from this, I need to reduce the non-cash expenses like provisions, bad
Jagadeesh,
debts,
can you explain?
depreciation. Sorry, sir.
Let me explain over here.
Yes, sir. Yes.
Okay. Especially with respect to clause 44, Institute has given a clear guidance note, like how do we reconcile the P&L number with GST supplies. So when you see the P&L account, there are components with respect to the salaries, there are components with respect to finance cost, there are components with respect to depreciation, what we are claiming. So basically the reconciliation with the P&L to the amount what we are paying to the registered suppliers and unregistered suppliers to be given in clause 44. Now, when we say the P&L, we have an expenditure of 100 rupees. We should add back the GST, the capital expenditure, what we are incurred. Capital expenditure predominantly with respect to your fixed assets, what you procured during the year. So that will get added back to the GST element will get added back to this one, P&L cost. And then what are the components you are paying to the salaries? So in employee benefit also, there are some components, right? And few things like where GST is not eligible at all. Like, so now we have to add back, reduce from my P&L cost, the entire salary cost, what you're paying to the employees, then the insurance, what you're paying to the insurance agents, that will be falling under your GST under, especially for the GST with the registered suppliers itself. And then in finance cost, the bank, the interest what you're paying to the bank on your loan, this will not be forming part of our expenditure under GST. So that also we should reduce from my P&L expenditure. What are the net amount we are having after the total P&L, adding back the capital expenditure what we are incurred, the fixed asset purchase during the year, reducing the salary cost, reducing the depreciation, reducing your bank loan interest. Then what are the number is left of? That number should be reconciled with the GST supplies. With unregistered supplies, how much we have purchased, and registered supplies, how much we have purchased. Those reconciliation is required. That is what clause 44 is asking. And Institute has given a clear definitions of all those things, which we can refer to that one. Yeah. What do you, Jagadeesh?
Yes, sir. Actually, this example is taken from the guidance note issued by ICI. So the same example they have used it there. So yes. So we'll see what are all the inclusions and exclusions. So what the Anil sir has told that capital expenditure should be added back. So that is the first inclusion, and non-GST expenditure such as expenditure on petroleum products ought to be bifurcated under exempt supply. If you see the exempt supply definition, section 2, subsection 47 of GST Act, exempt supply includes non-taxable supply. So you need to include it in petroleum products. HSS should be included it in the exempt supply. And the exclusions, what are all the exclusions? Schedule 3 transaction, that is the non-GST supply, that is negative list under GST. All these should be excluded, like the salary, HSS, high speed diesel, or high C sale, sorry, HSS high C sales, custom bonded sale, all those should be custom bonded purchases, sorry, salaries, custom bonded purchases, all that should be excluded. And also the notional entries, what the Anil sir had just now discussed, like depreciation, amortization, provisions, bad debts written off, all the non-cash expenditures should be excluded. And also similarly, losses, etc. on the security of the share transaction should also be specifically excluded. So you should prepare a detailed working note how you are presenting it in the tax audit report well before the filing of the tax audit report. And now coming to the next one. So in the clause 44, I said that all the procurements from the registered person should be bifurcated into the 3 parts, that is exempt, composition, and the others. So what is exempted? What are all should be included it here in the exempt? So what is meant by exempt supply? So what is meant by the exempt supply? So exempt supply defined under section 247. Exempt supply means supply of any goods or services both which attracts nil rate of tax. That means in the rate notification against that good or service, rate will be mentioned as a nil, or which may be wholly exempt by way of the exemption notification, and also includes non-taxable supply. So if you see the definition of the non-taxable supply means it is defined under section 2, subsection 78 of the CGST Act. Non-taxable supply means which is not leviable to tax under this act. So as of now, the supply of alcoholic liquor for home consumption is kept out of the purview of the GST Act. Similarly, supply of petroleum crude, HSD, water spirit, natural gas, and ATF. That is 5 petroleum products are also kept out of the purview of the GST. So these are also should be part of my exempt supply. If any expenditure related to exempt, then I need to report it in the clause 3. Sorry, column number 3 here. And now coming to the composition scheme, there may be a question that the supplier is the registered person, but he is supplying the exempted goods or services. Then where I have to report it here, whether it in the others here in the column number 5 or column number 3. You have to report it in the column number 3 only, because it is an exempt supply. The priority should be given to the exempt supply, not the type of the supplier. Now coming to the next part, relating to the entities falling under the composition scheme. So he's the registered person only, but registered under the composition scheme. So, composition dealer. Usually he will not issue the tax invoice, he will issue the bill of supply copy. So what are all the procurement you procure from the composition dealer, then you need to report it here. So relating to the other registered entity, that is the all other supply other than the exempt supplies and the composite supplies, you need to report it in the column 5. So obviously 3 plus 4 plus 5 is 6, and 6 plus 7 is nothing but your 2, column number 2. So for this only we have prepared the reconciliation. This is the reconciliation statement that we have prepared as a working note. So hope it is clear. Yes. So what is the source of information to fill it in the column 3? That is the exempt supply. Usually in the GST Act 3B, you need to report the inward supplies received from the composition dealer, exempt and related supplies in the table 5. But most of the cases, many taxpayers are not filling this table 5. So we can extract this information from the GST portal if we fill it correctly. So yes, what do you mean, Ashika ma'am?
Yeah, Jagadeesh.
Sir, Anil sir, would you like to add anything with respect to this tax audit report, sir? Yeah.
So clause 44, now it has become very serious. The reporting on clause 44, we have to take it, we can't take it lightly. As we were mentioning, Jagadeesh, we have to validate all the numbers with the returns, what we are filing with 3B.
Yes. Yes, I have also seen that many of the
one more thing, what we see is that the import of services.
Yes, sir.
The point what we have to address here, like how do we report that one? The import services, what we are doing, like let us say we are availing services from AWS or Google or any technology services where we are paying RCM, right? So RCM, those things will be even if you are paying under RCM, then it will be considered as a registered supply only, and it should come under your relating to the other registered entities.
Yes.
And we should report there.
Yes.
Yeah.
So in many cases, just by giving the disclaimer, many people are skipping this clause 44. So it is now mandatory. You cannot skip like that, because even in the GST, you are mandatorily required to maintain all these registers.
Right. And adding to you, Jagadeesh, like when we say people are skipping, but we recommend that we should qualify in 3CB, 3CA.
Yes.
Saying that there's a qualification pair which has been given. Like how do we give a qualification on an audit report? We should mention clearly saying as the assessee is not maintaining the documents, and hence we are not able to report it. Instead of giving in clause 44, better give it in 3CA, 3CB.
Yes.
Plus, this data can be correlated with table 14 of GSTR 9C. In GSTR 9C, table 14, we have to give expense-wise bifurcation with the detail of total ITC available, total ITC available. So which work as a corresponding check with this clause 44. With this clause 44 of the tax audit report. One. Second, as Jagadeesh explained, there are first with GST and second is without GST. Now, when we see with GST, there is one registered, so that you can borrow from GSTR 2B or 2A. 2A will be preferable because there is invoice wise and tax audit is financial year wise. So 2A give me financial year wise. Therefore, that data I can borrow and put the detail for register. But when it comes to composition and exempt, now, if you will reconnect GSTR 3B, which Jagadeesh also shown in this slide, there we required to furnish the data with respect to exempt supply, composition. However, most of the SSCs are not compliant. So registered, we can borrow from 2A and we can cross verify with the data available with us in the books. Composition part, you can check where there is a GSTN, but no GST mentioned. So there may be a chance I'm saying there is no surety that it may be a composition dealer, that's why GST has been recorded, but no tax component. Coming to the part of exempt has a separate definition under GST. So over there you have to refer exempt notifications, but you need to be careful for exempt part. If you are considering something exempt where GST is not charged, officer may verify those data in order to identify the case of RCM applicant. That is what I just want to add. So now we can proceed with this. We come to the end of our tax audit report related topic and GST disclosure. Now we will move on to our annual return part. But over annual return part, we will be keep limiting it to the fact of dependency between audited financial and reporting in annual return.
Yes. So now we will be talking about getting ready for GST annual return in consonance with the tax audit workings, which we have discussed just now. Now, for getting ready for the GST annual return, we need to perform certain reconciliations. Why we need to perform these reconciliations? Because we need to identify the errors, make the rectifications, and if the errors are identified on an early basis, the interest liability also comes down, which is beneficial for the taxpayer. And in case, as we are experiencing, the department is continuously in the process of making scrutiny assessments and other notices. We need to, in order to provide reply to such notices also, we need to, perform these reconciliations. What are the reconciliations which we need to perform? We need to perform reconciliations between 3B and 1. Both are outward supply returns. One comes only for the in respect of outward supply. 3B is our net payment return, output minus input. 3B and 2A. 3B, whatever ITC we are claiming in our GSTR 3B, and 2A, whatever ITC which is reflecting 2A, whereby our suppliers have filed their GSTR 1 and mentioned those ITC in our GST Act. Now, returns versus books. These returns will include both 1 and 3B, one for the purpose of for output reconciliation, and in the books, we need to also reconcile the ITC which we have claimed in 3B versus the ITC which we have recorded in our books of accounts. Along with everything, we also need to consider the amendments, if any, we have made during the year. Now, how do we perform these reconciliations? We need to go and fetch the figures from the appropriate tables from different returns, and then finally arrive at the correct figures by preparing a proper reconciliation statement, which gives us the reasoning for each such difference arose in the process of reconciliation. Now, as we all know, aggregate turnover in GST, it is defined under section 2, subsection 6 of the GST Act, whereby it includes all taxable supplies, exempt supplies, zero rated supplies, including export of goods and inter-unit transfer to branches. Exempt supplies also includes non-GST supply. But for consideration of turnover as per IT Act, there is no such definition per se. What actually is treated as income in financials may not be treated as with a real income in GST. There will always be a difference between turnover as per GST and turnover as per the financials. Now, if we consider the turnover as per financials, what comes under turnover as per financials? Financial statements we prepare based on the accounting standards, be it a corporate entity, be it a non-corporate entity, we always follow the accounting standards, and if it's a listed entity, we follow the Indian accounting standards. So the standard for revenue recognition in case of non-corporate entities comes to be AS9, where correspondingly for Ind AS following entity, it is Ind AS 115. Now, invoice does not establish revenue. This means even if we have not, if we have received an advance in income in our books of accounts in case of supply of service or supply of goods, although there is no liability on our part to report such advances, to pay taxes on such advances receipt of goods under GST, but in case of services, we need to pay taxes on such advances. So that is a difference, which a reason whereby a difference may arise in the calculation of turnover as per financials and as per the GST. Now, credit note or debit note, there is no timeline prescribed under the act for any particular act for preparation of financial statements, but under the GST Act, credit notes do have a timeline, which is actually the date of filing annual return or the date or 30th November of the immediately subsequent year, whichever is earlier. So this also might be a reason for difference between the two turnovers. Now, revenue classification is governed by AS17. AS17 talks about segment reporting, and in GST, it is category wise B2B, SEZ, B2C, other things. Now, this if there is no monetary value, if a particular transaction does not contain any monetary value, it is not considered as a part of turnover as per our financials. But in GST, it is a deemed supply under Schedule 1, which says Schedule 1, which says it is a deemed supply even if the transaction has taken without consideration. Now, income for books may not be income for GST. Now, suppose we are auditing a proprietary concern or a individual who has a rental income, but that rental income is actually not exceeding 20 lakh, and his other income is also not exceeding more than 20 lakh, for which he needs to take a registration under GST. So this rental income will be accounted for in the books of accounts on a totality basis, will not be accounted for in GST, but when you compute turnover of this rental income as per IT Act, it would be 30% less than what it is in the books of accounts. For a partnership concern, any introduction of asset by a partner or receipt of asset on dissolution of partnership firm, partner salary and interest. Partner salary and interest is a deduction in the books of partnership, which is correspondingly an income in the hands of the partner as per the provisions of the. Might not be the case because if the partner as an individual is not registered under GST, his income under GST law would be nil. Other adjustments, discount and incentives. Now, this is one very popular topic whereby the differences actually arise due to for difference in turnover between GST and turnover between financials. What we basically prefer is we prefer netting of these discount and incentives with the purchases so as to avoid any differences between turnover as reported in our audited financials and turnover as reported in GST 9 and 9C. Foreign exchange gain, yeah, we can report it as a turnover in our financials. There is a separate column for that in adjusting the same in GST 9C if it is applicable to those SSEs. Profit on sale of assets, this will definitely be forming part of turnover as per financials, but this is not a part of, turnover as per GST. Because in GST, this will come as an adjustment. Recovery of bad debts, penalty, damages, forfeiture, these are all things which are actually part of, turnover as per financials and not turnover as per GST. Now, these are the line items which are actually mentioned in Form GST 9C, whereby we actually start with turnover as reported in the financials. Now, what basically needs to be kept in mind, GST, when we calculate turnover, it is actually registration wise, but in financials, we have to give a consolidated turnover. For that, we need, while filing GST 9C of such entities whereby a consolidated turnover is given in the financials, we actually need to, provide a final trial balance along with an attachment in GST 9C for the state for which we are filing. So turnover as per audited financial statements, here we have to put it for the respective state and not for the total consolidated turnover. Now, unbilled revenue at the beginning of the financial year, as I mentioned earlier, there might be cases where there are unbilled revenue at the beginning of the financial year. You have received the advances, but you had not billed it. So that is added back to this turnover. Unadjusted advances at the end of the financial year. This means the advances which are still remain unadjusted at the end of the financial year, these also needs to be added. If any deemed supply is there under Schedule 1, be it under any of the 4 clauses which are mentioned in Schedule 1, due to lack of time, I'm not getting into the details of that. But if any of the transactions take place in your registration which are covering under Schedule 1, you need to report it here. Credit notes issued after the end of the financial year but reflected later on, that will be added. Trade discounts accounted, that will be added. Unbilled revenue at the end of the financial year will be deducted. Unadjusted advances at the beginning of the financial year will be deducted. Foreign exchange fluctuations and everything as per the profit or loss will be added or deducted respectively. And any other adjustments, if there are any, will be reported in table 5O of GSTR 9C, and thereby we get the turnover as per, we compare the turnover as per GSTR 9 and turnover as per the books of accounts. If there is any reason, if there is any unreconciled turnover, we need to put that in the reason column in the next tab of GSTR 9C. Reconciliations to avoid any litigations. Now, these are the reconciliations as we already mentioned earlier. To perform GST, to perform workings on GST annual return. In addition to that, if GST annual return preparation work has started during the course of tax audit or statutory audit, as the case may be, we can additionally reconcile the total turnover as reported in our monthly returns with the 26 AS or AIS. Anyways, nowadays, both the departments are actually exchanging the data on their database. So whenever you import a 26 AS or AIS, the GST turnover reported in the monthly returns gets auto-reflected there. So both the departments have the data, have been sharing the database, which is also an additional liability on us as professionals to cross-check whether the turnover is matching. Reconcile turnover with GST TDS. Now, why this is important? Because I have experienced many cases where the GST TDS, which is being deducted by the government departments or the local authorities, they actually deduct it in a wrong manner, whereby they are liable to deduct on the taxable value. They actually deduct it in the invoice value, and we also, without cross-checking the same, accept the credit. Now, when these notices arrive, we get difference between sales as reported in GSTR 1 and sales as reflecting in GSTR 7 filed by the supplier at the other end. RCM, TDS, TCS compliances, we need to comply with all these things, specifically with RCM. It's not limited to GTA or security services. There are a lot many services which may be applicable to depending upon the clientele. One important service which most of the clientele does miss providing RCM is RCM on director remuneration of independent directors, whereby TDS is deducted under section 194 JB. So if the tax audit is in progress right now, you can actually cross check whether RCM has been paid on such director remuneration to independent directors or not. For directors who are not independent directors and TDS are deducted under section 192 of Income Tax Act, no RCM liability arises for such director remuneration. Show cause notice demand order with contingent liabilities. Now, if any show cause notice comes, we start reconciling. We have to respond to the department. We have to comply with the legal procedures and everything so that the demand gets waived off, or if we have already paid that demand at the time of filing annual return of previous years, we need to make sure that we communicate the same with the proper officer. Adjustment. Moreover, adjustments of previous years, if it is done subsequently in the current year returns, that needs to be put forthwith in appropriate columns of GSTR 9, whereby any amendments, if it has been increased or decreased, should be put in table 10 and table 11 of GSTR 9. Or if any ITC which has been claimed in of pertaining to a particular year has been claimed in subsequent year returns, that needs to be put in table 13 of GSTR 9. These are all the miscellaneous reconciliations which we can perform. For review with the balance sheet, now this is like the balance of electronic credit ledger. If it is lying in anything is lying in the electronic credit ledger, in the books of accounts, it should match with the GST portal and such should be shown as other current assets in the balance sheet. Refund claimed in GST portal should also be reflecting in the books of accounts. GST liability for all the months for which the return has been filed after 31st March 2024 should be and paid in cash, should be accounted for as GST payable and grouped under other current liabilities. Now, finalization of turnover and output liability thereon. For matching turnover in GST, there are three types of supplies: taxable supply, not taxable supply, and no supply. Taxable supply, domestic supply, B2B supply, deemed export, zero rated without payment. Not taxable, zero rated. Not taxable, zero rated with and exempted supplies. No supplies, which is a transaction in money or petroleum products.
Basically, Hitesh wants to present that we have to do multi-dimensional GST reconciliation. Not only we should match that my figure in audited financial statement is showing 100, so my GSTR 1 or 3 is showing 100, and over there work end. As he took you through all those slides, where he showed there can be a multiple reason for difference between what has been shown as income in audited financial and what is our income as per GST. Because books is equal to turnover, but when it comes to GST, it is equal to supply. So that is what need to be verified. And while doing verification, we need to be careful. We do this all type of report, type wise, rate wise, then credit and debit note also need to be separately reconciled. Now, there is a reason why we are focusing on all this thing, because based on our audited financial, we show what is my total revenue, which is revenue from operation and other income, which is what from where 9C turnover start. And there are multiple rows which has been given to allow us to do it. But what the people does is they sometimes report everything under other adjustment FIFO. You should not do that residual thing. Whatever we report in FIFO comes in the eye of the officer, and they are definitely going to ask you to give the various document clarification what you have shown as FIFO. So what he is trying to put is we should check and report in a respective column based on the way we have prepared our audited financial statement. And we should also keep in mind whatever we are reporting in other adjustment can it be taken care while finalizing the books. So this is what he has stated till now. So moving on. So with this, now this has been covered, we'll move to expenses.
Yeah, we'll move to the expense analysis. Now for expense analysis, we can divide the expenses in two parts, that is with GST, without GST. Now, which the expenses which is with GST, we need to further reclassify it on the basis whether it is eligible or it is ineligible. Now, and coming to without GST part, it may either be an exempt or non-GST supply or reverse charge. Matching of credits, we need to match all the ITC with the portal. If everything is matching, we need not take any action. If some credit is appearing only in books and not in portal, check whether we have to check whether the same credits can be taken as per rule 36(4) or invoice based. But now since the law has changed, even section 16 has amended itself to the effect that whatever ITC is actually coming in GST Act 2B should be claimed. So until and unless it is advisable that until and unless the ITC reflects in your GST Act 2B, it should not be claimed based on the invoice because that would only invite further litigation in near future. And some is and another one which we can see is credit existing, but we credit existing on portal and not in books. This implies that we need to check whether this invoice actually pertains to our book, our entity. And if it is actually pertaining, we need to record it in the books of accounts because recording of expense in books of accounts is of utmost importance, not only from GST perspective, even if it is we are ineligible to claim such input, we don't record it an input, we totally expense of the GST as well. Now, this one it pertains to allowance or disallowance of ITC. Credit which is exclusively related to taxable supplies, it is allowed in full. To zero rated supplies, it is allowed in full. Credit which is exclusively related to purposes which are other than the course, other than you use for other than in the course of furtherance of business, 100% is disallowed. For making exempt supply, 100% is disallowed. Credit which is partly for exempt and partly for taxable, there comes in the rule of rule 42, rule 43 reversal, which proportionately needs to be taken care of at the time of filing annual return. Now ITC reconciliation with books, net ITC available, this will be table 7J of JSTR 9, whereby we report the net ITC available, net of credit note and debit note, plus ITC availed for the previous financial year, which we report in table 13. And if any reversal of this financial year we have done in the next financial year, which we report in table 12 of GSTR 9, this adding these mapping these three figures together will arrive at the ITC as per the books.
So with this, we come to the so with this, we come to our end of our first session. Due to shortage of time, recent update won't be able to cover, but we will be sharing you in PPT all the recent update which has come. If anybody has any question, any query, they can either drop it in chat box or they can unmute and ask the query. GST required person, right? The GST required a proprietor, registered person required a proprietor running a car workshop, taking GST on business.
Company need to report it.
So there is one question from Rajesh Ji. GST registered person running a car workshop. Taken GST on that business only need to report rent received from house property and also rent received from passenger auto on a daily basis. Sir, you have written the fact, but you haven't write what your query is. Sir, either you can unmute and ask or you can In chat box, you can write down your query. Composition can file GSTR4 for compulsory, sir. Yeah, GSTR4 is now compulsory to be filed. Need to collect GST on rent from commercial building and passenger transport. Yes, sir, you have to collect GST. But you have to check your threshold limit, it is below 20 or above 20. If it is below 20, no need, but it is above 20, then you have to collect GST and pay. Aggregate turnover in total will be checked because your is a proprietorship concern. Purchase also update HSN code. I didn't got the query. Purchase also update HSN code. Can you elaborate little more? It is written as Samsung SM. If you have any query in relation to tax audit report also, you can ask. We have Anil sir with us. Fine. So now we will move to our another session of the day, tax session. Delhi Babu, over to you.
Yeah, thank you, ma'am. Thank you so much for giving time to present my tech session. Yeah, I think wanted to say thanks to all GST team to present this beautiful session. I think this is very much useful session to everyone day-to-day practice and monthly returns. It's a very beautiful session, I can say. Thank you. Yeah, coming to my session, tech session. Yeah, here also we are going to cover three important useful modules. It is Tally, add-ons, uh, integrations with Google Sheet, and auto emailing of payment advices, and also manual triggers and bill adjustments. These three are very, very beautiful tools and also most useful tools. There are many persons are using. Maybe I hope this integration and tools will help you also in your regular day-to-day activities. Now I'm going to present my screen. Before presenting, starting my session, just I wanted to ask one question. There are more participants. If possible, can you using Tally? Based on that, yes or no, maybe I can present effectively. Anyhow, I will present effectively. No worry. Just at least I are using Tally. Is my voice is audible? Hello. Hello. Oh, great.
It's breaking in between.
Yeah, great. Thank you. Can you please let me know who are all using, at least say yes, if you are using Tally or Google Sheets for some other purpose? Yeah, I'll wait for another 10 seconds. Yeah, great. Thank you. Thank you for your response. Okay, here today I'm going to show you how to sync trial balances based on that period to Google Sheet. If you get your trial balance to Google Sheet, there you can prepare your financials or monthly financials or comparisons, quarterly comparisons, whatever reports you want based on the trial balance, you can prepare it. To import that data, there is one small extension and API integration. It's a very interesting and beautiful tool. Most of the regular practices, they can use this tool. Maybe they can easily share online reports to your management or reviewers. They can easily monitor your daily reports or the investments, whatever, based on your management requirement reports, you can create based on trial balance. And also you can integrate any reports, any details you can post to Google spreadsheet using that API. Then you can create presentation, you can share it. Because Tally has limitations, you cannot share through Tally all the reports. There is a browser option, but there are also the limitations are there. Based on your requirements, you can't prepare in Tally and you can't able to share to through web view. But here, if you have some data, here you can prepare based on your requirements, the presentation, graphical presentations, or daily reports, and you can share to the respective persons. They can see anytime through mobile. That is one major advantage if you connect with Google Spreadsheet or any other cloud spaces also. Just only thing you'll have to create one API, you'll have to integrate that one from Tally. Here I just choose Google Spreadsheet and Tally. I'll show you quickly how it is working. Then I'll show you step by step how we can generate API, then how we can integrate with the Tally. First thing, just quickly I'll show you. There is one just demo company, Jain and Stoneworks Limited. Here, yeah, this data also will post based on this current period. Just I'm going to display trial balance. Here, if we ledger wise, this is the trial balance, just same balances I'm trying to post to Google Spreadsheet. For this, I given one button here, upload data to Google Spreadsheet. If you press it, it will ask upload bills outstanding. No, now I'm just trying to post trial balances. If you press no, then again it will ask trial balances. Then here I'm pressing yes. It will transfer all the balances, the trial balances based on this period to Google Spreadsheet now. See here you can able to see very quickly it will post to your Google Spreadsheet. Here it is inserting the dynamically it is inserting. Just to for your interest, I'm showing this. Okay, here I think all balances are transferred to Google Spreadsheet. See how simply it is transferred. Just click a button, it's transferred. The ledger balances, balance sheet, all the trial balances to Google Spreadsheet. Using this data, you can prepare many reports based on your requirements. If you want to see data's balances, you can apply pivots. Maybe if you have a bit familiar with Google Spreadsheet, you can create multiple reports. Insert pivot tables. Just I'm just creating one small sample report. A very simple report. I'm using just pivot functionality and preparing this report. Total assets and expenses, income and liability. Just one small report, just for your understanding of creating using one pivot report. To just confirm this balance are right or wrong, you can apply automatically taking. We'll come to Tally. See here 24 crores, 20 something is there, but here some differences are okay. It won't take inventory and profit and loss account balance. That maybe we'll have to enter manually. That's not a big jump. 383. Right. 240. 306. Yeah. So we'll see. Profit and loss account 82 lakhs. 255, 656 point. Okay, not really good. If I see the difference, it is coming very minimal. 31 paisa. Maybe I didn't enter that round of right. That is why it's coming. Now it is matching the TB also as per Tally and as per Google Sheet. This give me a second. Yes. Hello. Okay, so please show the once again. Okay, definitely. Hello. Are you able to hear my voice?
Yes, yes.
Great, thank you. And can you please elaborate with the step-by-step process? Yeah, definitely. This is just one one overview. I'm showing how it is coming. Then I'll show you step by step how to generate API and how to connect with the Tally. Everything I'll show you. API. I'm just creating. Just I'm creating same. You can put any name based on your requirement. Just copying the same names. Right. Just now I created one new spreadsheet, but it's not integrated. Step one, I created just one new spreadsheet. I'm just going to close other spreadsheets. Don't want to. Script also. Here in the same spreadsheet, there is an option extensions. Here there is these are all inbuilt features only. There is no customized fields. The apps Google only will provide the app script feature. This will open with script editor. If you know bit of Java or macros, then you can easily understand this script. Just to update row by row the values. That's what this script I've written here. This is very few lines of data only. It's not much the data. Very simple data. If you know, then you can easily understand. Otherwise, you skip it. No issue. After Just will give one project name TBV2. Just will save this one. Yeah, this script only will identify the sheet and will update that. Otherwise, there is nothing is there in this script. See, this just very simple language only. Within a script, activate that, then range. If you know macros, then you can easily understand. Otherwise, if you know Java also, you can understand easily. Okay, once I update the script, okay, before deploying, I'll come to here again. See, I just created one new spreadsheet in Google with some required headers. Maybe these are all the standard headers. Names you can change whatever names, but you can't. This is the standard fields. If you want dynamic also, we can customize that way also. Suppose we also we can write a script. Here it is a standard columns. Within that columns, this titles you can change whatever you want. This is the step 1 activity. Step 2 extension. There is an option app script. This is Google scripts. We call as Google scripts or G script, whatever you want, you can call it. Then I just copied that existing script already I've written script. I copied to here. After copying, just we'll have to deploy this one. New deployment. Maybe it is a recorded webinar. You can try it maybe after this session or whenever you are having time. See, I'm just selecting here. There are multiple options. Here I'm using selecting web application. Just I'm giving one random name. What maybe the future reference if we are having multiple scripts and deployments, you can easily identify using. Here I'm just doing. I'm just using only one thing. I don't want to give one detailed specific name. This I given only just version 1. I'm just deploying it. See the configurations, very simple configurations, only anyone. Yeah, deployment. Then it will generate one deployment ID. Before generating, it will ask authentication from this mail account. This is my mail ID. Advance. Go to TB2. Hello. This is only Tally. Okay, very good question. This will work with all the versions of Tally. There is no limit in the versions. See here there is a deployment ID and web app. Suppose if you want to post from different applications, you can use this URL. This also I'll explain you in detail, maybe how this structure is developed. Okay, always if you want to integrate with third-party applications, any application to application, if you want to integrate, the mandatory requirements are one is URL, another one is authentication, another one is body. And beyond that, there will be some. If you have any control, then you can add controls in header spot. The mandatory form field is URL. That we called as API. This is the API. Okay. Within this API, this is the dynamic ID, that sheet key. Others are same only. This is the standard API. Within this API, this key will change sheet to sheet. Okay, this is the just one simple technique. This is the deployment ID. We call it as deployment ID or sheet protected key, or you can call it secret and kind of codes are there. Maybe here they are also displaying deployment ID. We also will use the same word deployment ID. Just copy the deployment ID. Okay. Now I'll come to here. this part is done. We are able to generate deployment ID. That means that we publish this sheet for integration purpose. That means once you generate deployment ID, it is ready to take information from third party application using this API. Okay. Knowledge in TDL development, maybe you can easily understand how we can develop that one. Otherwise, that's okay, leave it. This is, you can just treat it as one add-on. To press yes, the deployment ID. For trial balance, will erase the existing one, will replace this new one. I just replaced it. Now it is connected with this current this trial balance version 2 sheet. Now we'll
There is some constant flickering in the audio and video.
are able to hear my voice properly.
No, there is constant flickering in audio and both video.
Okay, I will switch it off my video. Then I'll check once again. Give me a second.
No, no, when I say video, I mean screen share. That is also flickering.
Okay. Long back, I switched off my video. Okay, anyhow, start it. No, audio is better. Thanks. Okay. Okay, after generating deployment, again, I'm just showing once again this step. Here you'll have to come to here, display add-on features. Here we need to update the deployment ID. Once it is updated, it is dynamically it will connect with that spreadsheet. Now we'll try to upload data to that sheet. Now it is asking upload trial balances to Google Sheet. Yes. We'll monitor from here. So it is updating. Trial balance version 2. Just only thing we'll have to generate the deployment ID using that very minimal steps. I'll show you once again. Not only trial balance, you can generate any sales reports, purchase report, or any specific group reports or investments or bank balances or bank transactions or payments and receipts. Or anything you want to transfer the data to Google Sheet, just the similar way we'll have to create API and we'll have to connect with Tally. Then you can able to post the data. One more thing, suppose here I'm just clicking and posting. If you want to automatically transfer the data based on schedules, that also is possible. Maybe every day, every 1 hour, we'll have to sync that data. That is also possible. Or every day, one time, that is also possible. Just only thing we'll have to set up few configurations. Based on that, it will transfer automatically. That I'll show you that schedule section also in another report. See, here the balances are transferred. Until now, any doubts or clarifications, or if you have any other questions, you can ask. I'll hold for 1 minute. One more thing, is it useful for you? Definitely, sir. I'll show you one more time. Yeah, number one, you need to create one new spreadsheet, Google spreadsheet. For that, maybe there are many ways to create new spreadsheet. Here I'm going to file and new and clicking on spreadsheet. It will create as a new spreadsheet. You just give one title. Just here I'm putting version 3. I'll copy and paste these titles into version 3. Okay. This maybe you know how to create the spreadsheet. From here, the bit maybe you'll have to observe very clearly how I am just going step by step. Here there is an option like file, edit, view, insert, format, data tools, extensions. Click on extensions. The Google App Script. This is separate button. Google App Script. Here they are showing as app scripts. Click on it. Here there are many features. Maybe here I am using only very standard script. See here there are many options. You can create scripts and HTMLs and libraries and multiple services also. There are many features, but I don't want to go into that now. See, once I come to here, I will create this as a V3. Just I wanted to give one name. Then here I have one script with me that I copied. Just I'm copy pasting the same script. Okay, I'll tell you, maybe you may have some question. Maybe you can ask that question also. How you prepared, how you written the script. We don't have that knowledge, right? You can ask that question also. One thing, there are many AI tools. You just go and ask that AI tool. This is what my requirement. You just ask, I want to import data from or post data from third-party application. Write a script for Google app. That will write a script and that will give you just before asking, you have to give some sheet names and this title names. If you mention that, that will give you with clear script, the same script, similar kind of script. Or if you want to add any multiple conditions also, you can ask that AI tool that will give you the write and give you the script. It is very easier way. Only thing you will have to have minimal knowledge to modify the script. Whatever they give, within that you will have to modify some things based on your requirement. That will give some random names that you will have to modify with actual names sometimes. There is only one thing. You no need to spend more than 5 minutes also to get this script modified. Okay, anyhow, I just copied it. I'm just saving the script. Okay. Then I'm just deploying it. New deployment. Settings, website. Here I'll give some version 3 something else. Here me only. Then here I'm selecting anyone. Then deploy. That's it. It's very simple steps. Maybe this video also we will share you through YouTube. Maybe our team will share you through email also. Then you can watch multiple times. Maybe you can easily understand. Recording will be shared to all the registered participants. Okay, super. A very good question. There are ChatGPT, Copilot. There are many tools, sir. You can use that. ChatGPT is very familiar for everyone. You can use ChatGPT or Copilot. Okay. So definitely there is a question, is it possible to share script? Definitely we will share you that script also, but you can connect with my team. They will support you, sir, for this, for any further developments or further corrections. Yeah, that's it, sir. It's generated, it deployed the script. If you want to see again that script, manage developments, here deployment ID and that URL, both are there. Whichever you want based on your application integration, you can copy it. Clear? Hope this trial balance integration is clear for everyone. Yeah. One more thing within the same tally only, I just 1 minute. Almost half an hour. It's over. Okay. The another important requirement most of the users are asking, they want to see their outstandings bill-wise details in cloud or shareable area. That means in Google Sheet and Office Sheet, any other cloud areas. From there, they can easily share with their management and managers to review there, or they can share with sales team or collection team also to collect bill-wise details or bill-wise amount payments. Okay. If you, this is one kind of a good solution without any charges, they can use Google Sheet. Are there any library or service that is supposed to? Absolutely. No, not required, sir. You no need to do that much exercises. It is very simple only. Okay, I'll explain you that technical scripts in end of the session once again. No worries. This is bill outstanding. Maybe if you have bill outstanding in Google Sheet spreadsheet, the major thing, if it is suppose customers wise, if you have bill wise outstandings, you can share this sheet with your collection team. They can easily check their bill wise details customer wise whenever they visit to client place. They can ask the balances with bill wise. They can collect it. It is very good information, and without any charges, you can use cloud facility using this integration. Just I'll show you here how we can post bill-wise outstanding process. Here, when I click in gateway of the tally, we given this button upload data to Google spreadsheets. First, it is asking upload outstanding bills to Google Sheet. Yes, if I press yes, then it will transfer bill-wise outstanding details to Google spreadsheet. Here we are giving party name, bill number, bill date, and bill amount, and bill party group also. Suppose if there is multiple groups, Hyderabad customers or Bombay customers or Chennai customers, Bangalore customers, if you are maintaining that kind of subgroups, you can easily filter by your group and follow up with that customers. Not only data, I'm just sending all bills details here, debtors and creditors both. You can filter by group based on your requirement, and you can provide that specific sheet to other respective users. This is one master sheet. Here you will get entire debtors and creditors data. Then you can create one more sheet and link to that only Hyderabad customers or Hyderabad vendors. You can provide that specific sheet to your respective users to follow up with that customers. That kind of protection controls also you can do from Google spreadsheet. There are some that kind of controls in Google spreadsheet. See, the data has come to Google Sheet now. See, it is happening. Telegram is not prepared now. Based on this, we can able to do multiple presentations using this data. Now we are able to see data and creators bill-wise data here. Okay. Until now, any doubts and questions? Same thing for bill-wise outstanding also, same steps. I created one sheet and exchanging app scripts. Through app scripts, I deployed it. I copied deployment ID. The same deployment ID I copied to into tally. See here, bill outstanding. A separate field is there. I copied to here. Based on this deployment ID, it will post to data to that specific sheet. Same steps which I follow for trial balance, here are the same steps. Only you can create this multiple sheets or multiple workbooks in Google spreadsheet, and you can integrate with tally based on your requirement and reports. If you want to customize any specific report, for example, purchase orders versus payments, or if you want to follow with some inventories or unmoving stock, there are many kind of requirements based on your business, you can design that hot topics or important high priority reports which you are following daily or weekly, that you can, if it is not there in system also, if the data is there anyhow, all the data will save into your watches and masters. Using that data, you can construct based on your requirement report using small customizations. It is very less cost when compared to other applications in Tally. It's very less cost. You can customize based on your, you don't need to spend time, to do more work on manipulating the data and creating the reports every day or every week or every month. Just if you create and put it into your system, then press the button, you can transfer to Google spreadsheet. There, from there you can give access to anyone, to your organization based on your requirements. They can easily access and they can easily review or they want to comment, they can comment. One more thing, if you want to go in beyond advanced in Google spreadsheet also, you can create separate tabs here like tool and extensions. From here, if you want to send any notifications or reminders or follow-ups, also you can send from here. That is also possible. Now I'm not going to cover the subject, just I'm giving you one information. From Google Sheet, using app scripts, you can write many things here. Like it is one macro, VBA, VBS, or .NET or Java. Here, this will support macros and also Java both. You can, if you know basic knowledge, you can create multiple reports and triggers and reminders. Many things you can do from here also if you have data. Yeah, that's it about integrations. Anything, any questions from your end? I'm checking with you. Is my voice is audible?
Yes.
Okay, thank you. Is it usable, these two integrations which I shown? Great, thank you. Thank you so much. We'll move to next topic. Auto emailing of payment advices, or you can trigger manually also. It is from Tally, it's not from Google Sheets. That Google Sheet integration project is over. Okay. Simply I show you. This is just most of the businesses which have observed, they are facing issue. Many their vendors or customers are asking, okay, if you take vendors only, they're asking, just send me a confirmation, payment advisors. Or if there are any middle agents, they are also expecting communication. Is the payment done to my party? That time many persons are, I think 1 or 2 persons are sitting in office, or if there is no staff or a staff, maybe staff limitations, they are unable to provide on time information to their agents or vendors. Number one. Number two, if there is no communication, again they will call and irritate to employees in account department or payment department, just send it, or they will expect multiple information to share. If you give mobile access, mobile numbers, instead of that, you can. There are many reasons. If you go business to business, there are multiple challenges and issues. At least this tool will save most of the time. Or in regular basis, also, if you do payment automatically, it will create a payment advisor. Otherwise, if you don't want to send at real time, you can schedule every day once. By end of the day, maybe 8 o'clock or 9 o'clock, you can schedule the timing. Based on the timing, the current date, all the payments, it will trigger with payment advice, complete informations to the respective vendors. Or if you want to tag into your agents also, or any middle persons, you can tag them. That will trigger to that persons also. This payment has done to the so and so party. This is the amount. This is the bill. All those things. There are multiple options. That is based on your business requirement. Here with simple standard feature, I'm going to show you. But it's a customized option. It's not default option. It's small TDL we written and we are using for many my clients. It is helping a lot for them. Okay. Anyhow, I'm just showing from configurations. See from health TDLs, the number one option you have to load the TDL. This is the TDL payment advice. Auto email TXT. I just loaded it. After this, there is one more configuration from F6. Here we'll have to configure from mail ID, from where it should trigger the mail ID. I given my mail ID deliverable.in and passwords. you want to add CC and BCC also, we can add it. That will send a copy to that persons along with that party. For example, if it will trigger directly to party, along with party, if you want to mark with your agent or any middle persons, you can add it. Otherwise, if you want to add it into your finance manager CFO for management major payments, if it is a big bigger payment, then you can mark into your CFO or any important persons in BCC also. This is the one-time configurations. Here I change it to sometime 17, 11. 21 for 11. Here auto schedule option is there. It is already there. We will see. Just we'll wait for a minute. I close my tally. Hmm, 11. We'll change it to some different 5, 13. Here in gateway of tally, I will given this option email scheduler. If you see, if you observe in calculator panel, it started 7:11 now. Maybe once it is come to 17:13, automatically it will trigger emails. I'll show you manual option. So we'll wait for 1 minute. Before that, if you have any questions and doubts, please raise through chat. We'll clarify that. There is 1 minute to trigger auto email. Using this auto emailing system for payments, receipts, any other watches also, you don't need to do manually. The system will trigger automatically. It will communicate to party in real time. That will help a lot to you and your parties also. That is also depending on your business and business need. For not for all, if you send for small business also, that will help. But sometimes for normal business is not required. I can't say not required. Maybe you can communicate. Maybe there is your internal communication. You can communicate. If it is a larger businesses, if it is really needed, maybe it is very helpful for larger businesses. If you have more than 100, 200 vendors, if you are purchasing daily or weekly, more purchases, that time it will help a lot. Almost or in 17:13, maybe there will be seconds. It will trigger automatically. See, automatically it is sending mail. The current date, all the payments it will take, and it will send each and every payment to that is expecting a party with payment advice. It is triggered. I'll show you here. This is my sent mail ID. Correct word. 1 minute ago. This is the payment advice. Triggered to the person. Number 1. Number 2. This is for internal communication. Maybe if there is any person to monitor whether it is sent or not. Maybe in tally sometimes it can be closed. There is no power or internet, then it won't trigger the mail. That is one limitation in tally. At least if you can monitor based on this mail payment advice email status mail ID. Here if you see total processor 2 dated so and so and email sent to. If there is any failed, maybe sometimes you can in party level, if you enter in wrong mail ID or with some special characters, if it is not in format, if it is invalid email ID, that time it won't trigger. That also it will show this mail ID is sent, this many mail IDs, sorry, payment address is not sent for this parties. That will show separate list below this one. List of mail ID success, list of mail is not success. Based on that, at least you can go and check that mail ID is right or wrong, then you can update and you can trigger manually. This is one status for the companies to monitor whether this mail is triggered or not. I'll show you manually how we can trigger. See here automatically when I set up in the F1 configuration, this is one time setup. I switched on it, the scheduler, it is triggering based on the time. But as we seen, if there is any email corrections or some other new payments is created, you want to send manually instead of this timer, you can click this button, payment email payment advice. Then you can put the date, or if you want to send backdated also, you can give the date and enter. Then again that emails will send for that date for all the payment vouchers. Or maybe you can ask one more question. Do I want to send for all the payment vouchers? There is no option. Is there any option to send only selected vouchers? Yes, that option is also is there. You can select only that particular out of 10 payment vouchers. If you want to send only 2, you can select the 2 and you can trigger the same email ID. That option also is there. See, again, send. There are multiple options based on your business need. We can change the configurations and we can use that, and automatically that will send reminders to your parties. It is up to your business and your requirements and your design. Based on that, we can slide modifications. If you do slide modification, automatically you can get that expected methods in system. Yeah, now we completed that second topic also, the bulk email for payments also. Until now, any doubts and clarifications? Yeah, the third topic is very important topic. The maybe most of the businesses are having issuing bill adjustment. When they are, for example, if you take AR part, means sales department, in that maybe they will do sales invoices. Sometimes they won't enable bill by bill configuration in the party level. If that is not there, it won't move to bill as outstanding report. Number one issue. Number two, if they enable also, they will do in sales voucher, they will give proper reference number. In receipt voucher, they won't take against that sales invoice number. They will give one random number. Otherwise, they will take as receipt voucher number as a reference number. That way, the sales will show debit, receipt will show credit. It will be an outstanding report. If there is 100 sales, it will show debit. If there is 100 receipts, it will show credit. The final amount will be the zero only, but it will show in outstanding. If they extract, if they want to see age-wise reports, all invoices will come. All bill details will come against the party. If you see in ledger balance, the ledger balance will be zero. But if you extract bill-wise details, that all references will come. But it will show in different ages, plus and minus, pluses, minus. It will create confusion for your reviewer also. For that, the first thing we also recommend, we also suggest, do proper references. That is one suggestion. Number two, if that kind of situation is there in your system, we have a tool that I'll show you now how we can use and we can rectify that kind of entries in FIFO basis. Yeah, I already loaded the TDL auto bill adjustments. Go to balance sheet. Just I'll take any one party. See, there is one for MRM party. See, here it is showing 1 crore 20 lakhs 85,000. If I go to bill wise outstanding, here it is showing few bills are there, few bills in on account. This is the problem. You can't able to extract and see proper age wise report. For this kind of situations, if you found in system, you can easily rectify using my tool. I'll show you how. I'll take another one ledger, Aditya Builders. That is 21,505. See, 21,505, yeah, exact sample is there. If you see here, there are many credits, many debits. Finally, 21,505 is matching. But they don't know exact which bill is having 21,505. To rectify this one, okay, we'll take this Aditya only, Aditya Builders first. You can adjust bill by bill or group wise. See, and finally you can able to see which bill is having outstanding from how many days. That also you can able to see. Yes, my voice is audible. Again, I'm checking. There is no response. I'll check multiple times. Is my voice is audible?
Yes.
Yeah, thank you. See, here we have provided option in gateway of tally in utilities auto bill adjustment. In auto bill adjustment, we can adjust group wise. For example, you can apply for sundry datas or sundry creditors directly within that sundry. If there is 1,000 parties, it will adjust for 1,000 parties. Otherwise, you can go by ledger wise. We recommend ledger wise only. It is easy to have a control for you also, at least which ledger is having issues. That kind of things you can monitor easily. Okay, now we'll see. Number one, we'll have to set OB. I'm just choosing ledger wise only. Aditya Builders. I'm just setting up opening balance. We'll see in alter mode that Aditya Builders. See, 47,000 is there. For this, it has taken the reference number as OB-31st March 23. This is updated by our tool, this reference number. Previously, sometimes if you see for many customers, there will be multiple debit and credits in opening also, the balance will come in on account. Now we are rectifying that to here. That sample I am not able to show here. Maybe if I found that, I'll show you that I just given on information. Here it is created on new reference OB 31st March 23 and this amount as a OB amount. Now we'll see and we'll update on account. We'll move it to on account 823 to 24 824. You can, this is the period. Within this period, we will have to move all the transactions to on account first. Why I'm doing this one? If I put all the accounts on account, then I can easily apply FIFO basis adjustments for sales and receipts, there are debit note, credit note, anything it will adjust on FIFO basis, and date and party, all those things it will adjust as a FIFO basis. Now, okay, we'll see again the same party, Aditi. See, all references move to on account other than that's OB. Now we'll adjust same 23 to 24 Aditya Builders. Very simple way. You can see your outstandings 21,505 with bill wise. There are two bills. One bill is having 2764, another bill is 18,741. Simply, whenever you go to customer, these two bills you can show it to them and you can ask money. It is also pending from almost 23. 490 days, 470 days is over. Instead of showing all debit credits, this is very beautiful. This way you can adjust using my tool. I'll show you once again for another party. Then I'll end my session. Okay, we'll take this one only. See, this is also will do the margin. Okay. The adjustment will set first OB for this. Set the OB. Yeah, for this complete period. Move to on account. Now for the same party, I'm just adjusting in FIFO basis bill references. Oh, very fast. Sure. 1 crore 20 lakhs. See, here there are 4 bills. 1 crore 20 lakhs. You can easily find out the which are all bills having latest bills. Okay, this way this tool will help you for one time. If there is any completely uh, missing in accounts for bill adjustments, you can use this tool for one time and you can adjust. So then second time on, you have to guide your team to adjust properly. Yeah, these are all the three sessions. One is Google Sheet integration, second one is payment advice, auto emailing and manual trigger, and third one is auto bill adjustments. Three sessions are completed, three topics are completed. Any doubts, any clarification, I'm there, you can ask. Yeah, I told you, right? I'll explain you the technical part in the end of the session. Sir, okay, there will be two parts. In technical part means number one, quickly I'll tell you for integration. Creating Google spreadsheets is very simple. Anyone can create. Another one, writing the script, app script, is a bit, if you don't have any knowledge, it's a bit complicated for you. Otherwise, you can take ChatGPT if you have minimum knowledge. At least if you have some knowledge about sheet, column, all those things, you can easily modify that and you can update it. Otherwise, it is challenging for you, to be frank. You just approach any your technical persons, known persons. Otherwise, you can send a mail us. We will help you. Number two. Number three, in Tally, with the writing script also, to post the data from Tally, we have to create one small TDL, that is, write Tally definition language. Using that script, we can able to post the data. Using these two methods, we can able to integrate. Otherwise, it won't be possible to post directly from Tally to Google Spreadsheet or any application. The first thing you have to generate any third party or any application. First, you have to generate one API. To post that API from another application, there also you have to create some script. If you have minimal knowledge, you can very happily, at least if you have very, very, very minimal knowledge, you can easily create it. If you don't have any knowledge, zero knowledge, it's a bit complicated. Otherwise, it is based on your knowledge that you can able to generate. Yeah, one more thing I suggest, if you need any information about it, or if you need these tools or help, any other more than this information, you can reach out to us. We will help you. Yeah, thank you. The major agenda, these are all the possibles we are just showing. With these are very, very minimal cost. Beyond this, if there is any customization required, you can customize. Most of the people don't know the inbuilt features only, but this is more than advanced. Here we are saying advanced, but there are beyond that we can do more customizations with minimal cost. That will save more time for users and management. Many times management will wait for reports from users. The users will say this is not there, that is not there, there is a ERP issue, there is one more thing, Excel not ever, Tally is not working, data is not exporting. Many things they will say because they don't know how to do that one. If they know, they can easily extract and they can manipulate the data in Excel also, they can present it. Sometimes if they don't know the Tally and Excel and some other basic knowledge, this kind of reasons will come. You can't get on time that your reports. Up to some time, maybe using this kind of small automations, you can get real time information. Yeah, this is what I want to share. I hope this session will help you. Thank you so much for giving this opportunity, Venu sir and Anil sir. I hope this session will help to all the users.